Morning, everybody. It's the 3rd of March. We are Signal Centre Talking Board. Joe Neighbour, Ian Coleman, Steve O'Hare. Morning, guys.
Good morning.
Good morning.
Everybody all right? Other than
sort of.
Ian, you sound like you've got coronavirus.
I feel hideous today.
Uh-oh.
Uh-oh.
Yeah.
Should we mute him so he doesn't give it to us?
Exactly.
Pass it down the wires.
Yeah.
Not good.
No.
Okay.
I've got a bad back, so I'm going to be grumpy today.
Okay. Normal, did you say?
Yeah. Very normal. No, it's Steve speaking.
It is now. Okay, so markets feel a bit all or nothing at the moment, don't they?
Yeah.
Intervention.
Yeah. The central banks are cheating again. Cheating.
Yeah, just throwing money at the
fuckers.
Problem. Never seem to want to let it flush out, do they?
No. And this is going to sort of like just, they sort of like think it's a really clever thing to do. It's not. Just let it go and just don't interfere. If we all got together and started trying to manipulate the markets like they do, we'd be in trouble. We'd get into trouble.
Yeah.
But they seem to get away with it.
Yeah. Well, yesterday we had 3 stop outs, followed from the day previous where we had 3 winners. So it's very volatile, and I don't think that's going to change anytime soon. So has anybody got anything they want to share with us today, trade idea wise?
Yeah, I've got a couple. Obviously, we're sort of everyone's thinking about intervention and the potential of it, and that's not coming out till 12 o'clock. So there's a couple of things I'm looking at. Really sort of this formation in the DAX. I mean, I still think I think we are going lower, but we're probably going to get some sort of intervention, some sort of rally, and we're going to realise that maybe that's not enough, and the markets I think will turn lower again. But initially today we could get this slight spike up in the next few hours. So this reverse head and shoulders pattern sloping downwards. So it's the market's weaker, so the reaction could be maybe not quite as strong, but this is the measured move target is like 12,600 in the DAX. So the level to watch is 12,200. So in an ideal world, I'd be trading around that level, either sort of selling it in front of, if it breaks, go long with it. So I think we are going to get the move higher. So I'm going to buy a break in this. And again, as I was saying,
not that I want now, to.
Yeah, going to buy it now. So 12,177. Realistically, the target
50% correction or higher.
No, I don't think it. I'm going to go for 2. I'm going to go for 12,350. I'm going to go limited because I think by the end of the day we could be turning round. So I'm not sort of 100%. Well, I've got to go 12,377. What about that? 12,377. That's 200. And 12,387. 210. I think you need quite a decent stop on this. Now 1270 tick stop, 210 tick target. So in front of the 38.2 retracement.
What's your stop, Stevie? 121.07.
Yeah, 12,107. So that's me done.
Okay.
I'm gonna
put that on now.
Oh, you're gonna put that on? Yeah, excellent. Joe, do you want to go?
Yeah, sure.
Share.
I'm looking at a couple of things actually, but I think I'm going to go with this, which is dollar CAD. Start off with a weekly chart. So it's trading in this bullish channel. We've seen a breakout of this sort of wedge pattern. So for me, looks like we're going to see a continuation higher. Of course, there's chat about intervention, which could impact it. This is the break of the wedge on the daily chart. We've had a pullback to retest the breakout level, which is always quite nice. And if we look at it on the 4-hour chart, then what I've got here is an inverse head and shoulders pattern. So we've seen a nice breakout, a nice pullback. 50% of that move higher there has retraced. So I'm going to be looking to buy that. The measured move of this inverse head and shoulders is up at 137.08. I'm going to target 136.98, so just shy of the round number. Buying at a market which is 33.62, with a stop just below this cluster of lows here at 133.05. So that's my trade for today. Buying
You like
dollar
that?
CAD.
Buying dollar, sell CAD. Oil had a nice rally yesterday, didn't it? So, yeah,
I was looking to sell that potentially into the rally.
Yeah, I mean, it did. We did okay in oil yesterday, didn't we? So, yeah, I don't know. I think you're right. I think it's a bit of a dead cat bounce in there. So that would work nicely. I like that yours inverse head and shoulders is a lot neater than mine.
I like the neat ones, although they're not always the best.
No, but I like the pullback. The throwback there is pretty hot.
Ian, what are you looking at?
I am looking at euro crosses again. I'm actually probably going to go with euro sterling again. Not saying we were unlucky. This was our bespoke resistance level, just above the 261.8% fib, 86.75. This is a previous swing high, so it was resistance, and it's acted as resistance again. If we look at this time frame here, which is the weekly time frame, we can see that we've reacted from this reverse trendline resistance and started to move lower. If we go to euro dollar trendline resistance, so similar sort of picture, trend line resistance has capped the rally. If we go to this chart, this pink line is our bespoke resistance at 111.82, and the black line is a previous swing high. So you've got these sort of three different confluence areas that all line up. So I'm going to go for euro sterling again. 87 the figure. No, I'll drop it in. Multitasking, boys.
Never even noticed, mate. You're so good at it.
Oh, and there was a 61.8% fib there as well, just to throw.
Now, who are you talking to? You talking to the missus or talking to
No, talking to you now.
She cares about the fib levels.
87 the figure. 85.45, which is reverse trend line support, and I want the stop just above yesterday's high, which is 87.45. I don't think the R is particularly marvelous. 3.4.
That'll do.
And that's what I'm going for. So I'm selling euro sterling again because I'm a persistent fucker. That's it.
Lovely stuff. Okay, so obviously volatility
85, 45
was the word of the day yesterday as governments continue to speculate over taking responsive action over the coronavirus outbreak. We have a G7 finance ministers meeting today. It's a conference call which will be held ahead of the New York Open. Latest reports suggest that there will be no immediate dramatic moves to cut interest rates anywhere. So this triggered a bit of a reversal in US equities late on, but all seemed quite positive this morning as we're up across the board. There was some obviously rate cut speculation, but nothing really doing. Obviously, the Aussies did cut rates yesterday, and the currency's actually rallied and continues to rally into this morning. I think that was pretty much priced in, wasn't it? The half a point.
I think cut. So. I think
yeah, it was.
I think everybody. 100%. I think it's a race to the bottom, isn't it? Really, at the moment, as far as interest rates are concerned.
I think we had a thing that in the morning it said there was a 100% chance of RBA cutting rates, so that was done deal.
Okay, so there is also some news or some ongoings in the Swiss National Bank. They are increasing their deposits in the last week to 595.8 billion from 592.3 billion in the previous week. So it's a faster rate of increase and suggests that more substantial intervention could be seen there as well. And we know
a lot of rumours of Swiss National Bank coming in or potentially coming in. We've got the G7 today, haven't we?
Yeah, G7 just before
12
the US
o'clock.
Open.
Yeah.
We've got UK construction PMI due at 9:30, and we've got Eurozone unemployment data and inflation data at 10 a.m. this morning. So could be some movement in sterling and euro crosses prior to that 12 o'clock meeting, but then I guess all eyes will be on that to see if they do come up with anything. We've also got the UK coming out with their plan today on how to deal with coronavirus as well at some point.
Yeah.
I mean, I'm not sure what that's going to entail.
What Boris is going to throw at us with that. That should be fun.
Yeah.
S&P futures went up over 1% overnight on the back of the G7 meeting, but then there was a Reuters report that the draft statement was not very specific, and that there was nothing in it about coordinated rate cuts, etc., etc. So we started to see a bit of a move to the downside. So I think it might be just today, might be more verbal than actual action, a bit like the ECB last week when it said they'll wait, and they've got all the tools to do whatever they want to do, basically.
Yeah. I think, they don't want to act too fast on these things, do they? They need to
you've got
let
to
it flush out a little bit.
Yeah.
I mean, we didn't really come off. Did we come off 20%? I don't think we did we? Nearly.
No, so about 16%
it's
on
not,
equities.
and these bounces that we are getting are sort of like normal bounces. They're not sort of, just.
They're not V-shaped recoveries, are they?
No, and actually, if I just share my screen again, just I wanted to sort of mention the S&P actually, but I wanted to mention it for a couple of reasons. And the one I was going to say is I'm not going to talk about. I'm just going to say, obviously, this is overnight volume, so it is pretty low anyway. So ignore that volume here. But you see these sort of like these spikes and are on sort of like the sell-offs on quite decent volume. Better than on the runners.
Candles there.
Yeah. Because it was the thing I watched last night. It was like between 8:45. It's this move here. It's sort of like between 8:45 and 9 o'clock. It's just before the close. You sort of it's a measure. I want to measure it really.
The S&P is 8.6% off of its lows that we saw on Friday.
Yeah, I mean, what's that? A 3.5% rally in 15 minutes. I mean, obviously you're getting the sell-offs, but the volume wasn't massively higher. Do you know what I mean? You had these big volume moves here, but you had this really decent 3.5% move up, but the volume was low. So they're weak bounces.
Yeah.
So maybe I think we just all got to be a little bit careful out there. The oil rally as well, I didn't think was it wasn't a bad little rally, but I don't know.
I think you could see these indices.
Week, you can sort of see the volumes sort of like dropping off. I know that's overnight volume, so ignore that. If we go back,
we could see 61.8 or 78.6% retracements of these moves, couldn't we, before it goes again?
Yeah, possibly.
Yeah, there's a big level on I noticed on S&P this morning. Our bespoke resistance is at 31.90 and 31.92 is a 61.8% fib. So
I feel that now trading the Dow and the DAX, I don't see any value in being short of it. When you sort of like think, feels weak or not. I mean, it's after this rally, it should feel weak, but it doesn't. It sort of feels like there's external forces affecting the market. So you just got to stand aside for the minute. I think I'll get another chance to sell it at some point, but maybe not today.
Okay. All right, guys. Well, let's see what everyone's got to say at this G7 meeting and see what the data comes out within the next hour or so. And we'll catch everybody tomorrow.
Lovely.
Have a good one.
All right,
good luck.
cheers.
Cheers, lads. Bye.